13,000. Big deal or no big deal?
Well, you'll hear a lot of people come out and say, technically, it's not a big deal. Technically being, a lot of people watch these...
Chart watchers.
That's right, chart watchers. They look for special numbers. The Dow typically isn't that number, but certainly it matters for a lot of people on Main Street. It matters to a lot of people who counted the stock market out a few years ago and said, I'm never going to get back in. And it matters for the largest companies in America.
And now, David, the people who said they were never going to get back in are probably kicking themselves. Do we get a bit more of a sucker's rally on top of this?
Well, I think what's interesting, whenever we hit one of these numbers, that's a nice round number.
It is very nice and very round.
It really doesn't mean anything to the market itself. But there are two camps, and I think when you talk about market psychology, so one is that we've hit a rally. We're gonna keep going up, and certainly there's a lot of supporting evidence. We've been on a nice run to get to 13,000. But there's another camp that says, all right, now we're starting to head into the days 2007, 2008, when the market, of course, peaked over 14,000 on the Dow. And they're going to say, well, maybe this run is going to run out, because we've seen it before.
What was also notable, maybe we can get the daily chart up in a moment of the Dow, is that today's move was not huge. And we're talking 23, 24 points. That's not a big move for the day. This isn't just a streaking ahead. This is very nervous, tentative trading and small gains.
But that's very characteristic of what we've seen this year. You don't see a lot of big moves to the upside, but certainly no moves to the downside either. And we've slowly ticked up. Today is actually the 41st day in a row that we haven't had a triple-digit Dow decline. 41 days, that's a long time, without a wake-up call, you know?
And the NASDAQ is now 13 points away from 3,000, and the NASDAQ, traditionally the tech-heavy index that was famed for getting very, very high during bubble 1.0, tech bubble 1.0 around 2000, 2001, and it just went sky high and has never really recovered. Does this matter?
The NASDAQ, of course, matters as well. We'll talk about Apple in a little bit, but technology has been...
To be fair, isn't the NASDAQ just Apple, basically? I mean, basically,
it
Apple
just Apple, but
it's a big piece. Apple is a big piece.
It's a very big piece. But keep in mind, Google is also doing well this year. IBM is also doing very well, and it has for the last few years. So it's not just a one-trick pony here. There are a couple of engines here.
I think it's interesting because when we used to see recovery rallies, they were always led by financials. This time around, we have no faith in financials. It is the tech sector. It is the NASDAQ, led by Apple and all those other companies that are leading us out. And really, that's where the M&A activity is. That's where the big profits are. So it's no surprise. That seems to be our new yardstick for coming out.
That's true, but you do leave out something. The oil companies, they're doing very well. Brent crude at over $120 a barrel. You've got oil, West Texas Intermediate at over $100 a barrel. Those oil companies, it's just, I mean, time is money was first invented as a phrase by the oil companies, I think, right?
Right, but look, these days, what's sexy is tech, and you got a big, ginormous IPO coming up in the form of Facebook. So that's where investors
enormous doesn't really mean to describe it, does it? It's just bigger than that, right? It's much bigger than that.
It is much bigger. Yeah. And those oil companies, we're talking about a commodity, and we're talking about global demand. So yeah, it is a good indicator, but it's sort of when you talk about American innovation, confidence in the economy, the tech sector is where it's at. Oil companies don't do anything differently than they did back in the recession. Just the price of their product is going up, whereas the tech sector is kind of reviving confidence.